Good afternoon, everybody. This is Tech Talk from MarketStream.live. I'm Joe Cusick from the Cusick Group, securities offered by MoneyBlock. Well, the technical nature of the market, I've talked about the basic technical components that we were looking at in some of the other segments today, but the 50-day moving average, you see all the major indices playing underneath it. From that respect, you know that that's the resistance point from a midterm perspective, from the price action that we've seen over the last 50 days. If you now turn your eyes to the larger markets, like the bonds, treasuries are coming off of their worst levels. As a matter of fact, you're seeing a pretty decent bounce in treasuries. As I watch right now, I'm looking at the 2-year basically losing about almost 1%. The weakness again is, and the 5 years are also right around they're also up about 1% in price. There seems to be a lot of reaction right now in the bond markets to two things. One is the fact that they've fallen pretty hard pretty fast. The other one is that it seems like Clinton's lead over Trump seems to be narrowing. That's put the bond markets on edge and is putting a closer eye on the Fed. From a technical perspective, with the 2-year right now at down about 2 bips, or basis points, at around 0.83%. The 5-year down 2 bips at around 1.29%, and the 10-year basically unchanged at 182. We're going to watch these very closely. The 30-year also unchanged at 2.58%. We're going to watch this closely. If these yields start to drop off, this could put some pressure on the Fed tomorrow, and we're going to keep a close eye on the Fed policy. But we're also going to keep a close eye on these prices. 163 on the long end. On the long bond, the 30-year, bouncing off of there. Do we see 170 and a challenge to the upside? I don't know about that. But right now, the strategy that has been working in this environment and in this technical environment has been long stocks, short bonds. Well, that's shifting. Bonds are bouncing off. Stocks are no longer firming up. Specifically, if you look at the S&Ps, while the sentiment picture right now doesn't seem overly negative, volatility is on the move. We have volatility right now. The VIX is at 19. Technically, if it starts to get back over into that 21, 22 range, you could see that the velocity of the downside could come into play. Now, next support on the S&Ps is if it breaks through 2100, is going to be right around that 2074 level on the S&P futures. And as a matter of fact, I'm going to take a look at that. And if, in fact, it does really develop a bearish sentiment in the S&Ps, you could see that 1950 is the next support level that we're going to keep an eye on. Switching gears and taking a look at what's been an unbelievable move. If you woke up this morning and all of a sudden you started looking at gas futures, RBOB as they're referred to, the gasoline futures spiked up from 145 overnight to about 161 and some change. Now, that's a huge move in the gas future market. The reason why, there was a pipeline explosion in Alabama. It was the Colonial Pipeline. That explosion caused the gas futures to go up almost 22 cents in a matter of almost a few prints. And that was an impressive move. It subsequently pulled back. Right now it's trading right around 147. We're going to watch RBOB very closely. One of the reasons why it popped so fast and so furious is because this pipeline, it actually ends up in the harbor of New York. So in other words, it's servicing all of the East Coast. So you got your heating oil, your gas, and so forth that's going to one of the largest markets, not only in the country, but in the world. So if there was a supply disruption there, which there looks like there's going to be, that impacted it. You saw how the futures reacted, but back down right around that 147 level. So it's come off of its highest levels. Also taking a look at the Nasdaq, right now you're looking at support on the Nasdaq at right around 4,800, 4,806. There could be a challenge of that if there is a break of that level. That's been the support level that we've seen. It's been challenged about 3 or 4 times over the last few months. If we see that there's a break there, you're going to see a potential challenge of 47.75 as the next support level. We're going to keep an eye on that. Also, taking a look at the currency markets, talked a lot about the dollar and the most recent dollar weakness. The euro has been on fire. As a matter of fact, if you've looked at it over the past about 5 sessions, it's challenging its 52-week highs. And basically, you see that there's the short interest is just getting squeezed in that market. So the euro right now challenging that 110 area. If dollar weakness continues based on the headlines that we're seeing and the uncertainty here in the political environment here in the United States, that could be a benefit for the euro, and look for euro strength to continue. And then finally, we just want to basically kind of wrap this all in a bow right now. The small caps, the Russell 2000, been watching those very closely over the last week or so. They've been leading and lagging the whole entire time as this market has been very choppy, but they've been leading and lagging to the downside. That's a red flag to me. The Russell 2000 is that canary in the coal mine. If we continue to see that weakness going into not only the remainder of this week and this earnings cycle, but into the November 8th elections. And by the way, just one side note on the November 8 elections, you're going to start hearing a lot of talk that election may be a lot like 2000. It may not be decided on November 8th. There could be a lot of push and pull on that vote, and it's going to be very scrutinized. Folks, I'm just telling you right now, be prepared for volatility going up into and through that event, our elections. It is going to be something that you're going to have to position for. There already have been a lot of positioning in the volatility products like the VIX, and there's also been a lot of institutions and retail traders that have looked at this market and just basically started to accumulate cash. Right now, the core positioning as far as how I'm working with clients, I'm still sticking with my core portfolio, but I do have exposure in full disclosure in the volatility markets for my clients. That's part of my strategic approach either way. I have scaled back. I'm more 35-40% vested in my core portfolio as being net long in different sectors. So I do have quite a bit of cash, and that's following suit with quite a few other institutional and other retail investors. So I just want to be in full disclosure about how I'm positioned and how my clients are positioned in this market. So with that being said, that's your technical talk for today. We're going to have the closing bell at 4:30 Eastern time. Please join us. See you then. Take care and have a great rest of the trading day.